Hey, how's it going? Welcome back to this recap for Thursday. Yeah. All right, let's go ahead and get into it. Take a look at price action and see what happened. We'll jump into the 15-minute like we always do and look at the levels and look at the energy in the space. And you can see it fighting. You can see the bulls are not letting the bears take it. The bears are lazy when it comes to them be able to be aggressive. They have it in their court and they will not take it. So be careful. That's what I'll say. So obviously price action in the trade is always in the morning. You'll probably realize if you went by my time frame in East or Central Standard Time, it's always around around 8:30 typically till about 10:30, 11 o'clock for me is about that energy where something's going to pop. Once that kind of pops, a lot of times you'll see either kind of a pullback to the center or pullback and draw down. But a lot of times when it pops, it's going to move. And then the rest of the day, it's on the move. That is really where we're going to dial in, and our system is really going to pop hard. And what we're always looking for now, it's always based off the core area. Now, one thing that already raises big red flags on BTC chart is you have your triggers on the outside and you have your daily support and resistance stuck in the inside. So the only thing that threw you a little bit today was your 30-minute candle. As you can see here in the chart on this vertical line I have here, look how big that candle is for 30 minutes. There's a lot of battle that happened in the session change this morning. That's what it drove it out to, where practically the breakout triggers were forced to sit out there with it. That was the only thing that was kind of strange. A lot of times you'd see a loading in here and it would have pulled everything tight, and then it would have been probably an expansion type position. Now, you might see up here, I have an indicator. Sometimes I turn on, sometimes I don't. Right now it's on. This actually is telling you really what's happening live on all time frames. And you can see that the higher time frames are not bearish. They're chop is what it's really saying. It's weak. It's not, it's neutral is really probably the better way to look at it. It's in a neutral state. And you're also sitting right around that 90,000. Every time it starts to try to get drawn down, it gets pushed back, it gets pulled up. Look at, we ran down and then we ran down again. And then now we are right here. We made this nice, we're on the 15-minute, it looks like a nice little head and shoulders in there. If you go out to the higher time frame, what's the date, 1 hour, what's it look like? That's, if you're a pattern person, this is their pattern that you're looking for a head and shoulders. You have a shoulder over here, you have a lower low, and then a higher low. That's what you're looking for, if that's what you're into. Myself, I don't really care a whole lot about that. But, each their own, right? That's how you want to trade. You can definitely trade that way. You just want to make sure that there's a reason for it. The higher time frames aren't really calling that yet in that kind of behavior. But it doesn't really matter. The higher time frames are also telling you that they're not getting too strong in a breakdown, but they're not giving us the all clear either. That's why I said right now it's in the bears' court. The bears have it, and they could rip this down if they wanted. But you could tell that if you could look at it that way, or you could say, well, the bulls aren't going to let them have it. Every time they try to move it, the bulls are constantly buying, and there's more strength in the buying than there is in the selling. I would say, looking at the charts and the way they're behaving, is there's less selling going on, and there's more strength for growth that's being built here, and we could snap out. Now, the one thing is, yes, on your 4 hour right now, you're underneath your 200 and your 21. So, yes, that's full on bearish. You did get the cross here, but in the last 8 hours after that cross, nothing has taken the price, nothing has pushed this down. And every time this has been going on, it's just been weaker and weaker for the bulls to take, or the bears to take it, and stronger for the bulls to take it. And if you go out to that daily, we were calling it right here, is it's weak, and the RSI is right now at a 44, and there's a couple other math that goes into that equation, but We did have a run down, and then we kind of bounced, and we were happy in this area again. Now we're below the 200 and the 21, so yes, that is a concern. The 200 right now is up at around 105,000. You have the 21 down here sitting with price action, but it's sitting up around the 92,000. It's right now the 21 sitting in the hot zone of 90,000 to around that 94,000 roughly, which is kind of this pocket that you see it fighting in right through here, right? That is the pocket that you would expect this to fight in, and it's already been fighting in this area for a while as you go back. I mean, we're looking at the daily chart. So you can see this area all right here. This was the 5th through the 12th. I mean, what's that? 6-7 days. You have the same thing. It rode. It did break down a little bit, but more or less it rode in this area. Then it fell on down again and grinded right back up to this area. So yeah, the daily right now is definitely, I would be careful, like we've been calling out. So let's jump into the 15-minute. Take a look at like, okay, well, what could we have done today? This is the trade setup that I took today. If you actually watched our live, this was taken on the live as well. The live called it out. Gross Monkey was on there doing the live today, and it was called out on the live, so you can see this in action and not watch the recap and learn the behavior. You could have actually taken action on the behavior that we always talk about. So this was the target that we looked for, is all the way down here. Now for the E's, you could have put the Fibonacci extensions on there. I've shown you those in the past and the settings, but you could have marked the breakout trigger and the breakdown trigger, and then there's your extension. Your target 1 was sitting right here. You can see it broke through that target 1, but really the price actually behaved on the target 1. Broke through hard right here and came down and would have hit you on the entire target that was added up with the levels, and broke down here. But it came back up and started to trade back up. And then you can see how it broke right through the 21. Now, if we go into the 5-minute here and analyze this a little bit, you can see right here was your exit more or less, right? And here is your target again on the 21. Basically, you're getting out. Now, you would have sat in here and whipsawed back and forth, but yeah, there's your true solid exit. And then it just climbed right back up here and took advantage of this upper area, got back up in here. Now, if you just left your stop here, you'd just been riding in this trade, waiting along. But you gave it back. Like, that's not the point. Like, if you're trading, you need to have targets. You don't just wait for it to hope it doesn't come back and get you. Because once it actually crossed back up and started climbing back in here, it's really just back into neutral territory. And it's like, okay, who wants to have it now? The bears took it a little ways, and then they decide, I don't want to do this, and they backed off, and it traded right back up to a neutral area again. So when you're looking at this, if you're sitting in this trade, I feel sorry for you, because that's not the way trading's supposed to work. You got to have a plan, and the plan would be to take it out on targets. So here's target 1, here's target 2, depending on if you're using different tools. I mean, you can see this is sitting in the liquidity supply and demand area for the higher time frames. It came right into it and took it out. That's another area for a target. You can see how it came back up and came down again. All these areas right here are calling this out. It's telling you, hey, it's time to get out, all that stuff. So now, and then your last hurrah, which we always say is the 5-minute. 21. Don't stick to that rule if that's going to be a rule for you, and to get yourself out. I would say take this as a rule. If you're in a trade, there's a reason for you to get into it. It rips down. It could have easily kept on going. I don't blame you. You would have rode it down. It came back up, and you got up in here, and but you want that close, which sometimes you're like, oh yeah, but it closes way up here. I'm going to get out way out here. Maybe, so, but I would say wait for the close in the 5-minute. You can see how it didn't close, came right back down, traded down, and then you got the close right here. So this is your true exit on the 5-minute, is right here. So that's really where you would have got out, which still is not a bad trade for the day. And days like this when you have the high spreads, because we always put our stops right above. If it's going to break down, we're going to put it on the high of the 30-minute candle. If it's going to break out on the top area and go up, we're going to put it on the low of the 30-minute candle. That's just easy ways to trade. Don't make it complex. And now, like we were saying, the price action is pushing back up, and you can see right here it's actually climbing back up through there. And this stuff right here is part of Cabrota. You can see dogfight weight. Basically, that means you're in the trenches. There's a lot going on in the trenches. It's hand-to-hand combat if you look at it that way, which is more or less chop, and that's what you're looking at would be a choppy market. And that's why you want to avoid, you know, that kind of noise that's in the charts right now. So that's about it, guys. We'll go ahead and see you in the next recap.